Hello, I'm Michelle Davis, a financial planner with Trillium Square Advisors, and I'm here to talk with you today about something called a 1031 exchange in real estate investing. We're going to delve into the basics of this transaction, including its rules and requirements. First, what is a 1031 exchange and why does it have a funny name? At its core, a 1031 exchange is the ability to swap one real estate investment property for another without incurring immediate tax liability. Going a little deeper, it's a tax-deferred transaction that allows real estate investors to sell property and under specific conditions reinvest the sales proceeds in another real estate property while deferring the capital gains taxes to a future date. Where does the funny name come from? Let me start this answer by saying it actually has two funny names. It gets the first one from the U.S. tax code section number that permits the tax deferral. Its other name is like-kind exchange. This came about because the property purchased must be in the same general category as the property sold. In other words, if you sell investment real estate, then you need to purchase investment real estate to qualify for the tax deferral. There's more to the story and history here for those of us who like to geek out on these details, but I'll leave history and naming details alone for now. All right, let's get further into the rules and requirements that investors need to adhere to, starting with the details of the namesake requirement. Number one, like-kind property. The property involved in this exchange must be of like kind, which typically means they must be used for investment or business purposes. No personal real estate or switching between investment and business purposes. This rule does allow for flexibility in property types as long as the property meets all of the criteria. The property types include a single-family rental house, a multifamily apartment complex. Number two, identification period. After selling the initial property, investors have 45 days to identify potential replacement properties. You can identify up to 3 properties, regardless of their combined value, or identify any number of properties so long as their combined value doesn't exceed 200% of the initial property's sale price. Number 3, closing period. Heads up, this one feels like a mouthful to me, because you have to watch the dates. So no, the deadline is whichever one of these dates comes first. Here we go. You must close on the replacement property within 180 days of the original selling the original property, or by the tax return due date, including extensions, for the year in which the initial property was sold. Number 4, use of a qualified intermediary. To ensure compliance with 1031 exchange rules, investors must work with a qualified intermediary, or QI, in nearly all 1031 exchange transactions. The QI helps facilitate the exchange, holds the proceeds from the sale of the initial property, and ensures that the funds are used to purchase the replacement property. Number 5, the replacement property is of equal or greater value. So the replacement property must have a fair market value equal to or greater than the relinquished property's fair market value. Any leftover cash received during the exchange may be subject to capital gains or depreciation recapture taxes. Speaking of funny names again, the name for any leftover cash in these transactions is boot. Yes, really, like the shoe. 6, the holding period. To qualify for a 1031 exchange, both the sold and replacement properties must be held for investment or business purposes. Intent to hold the property for personal use or immediate resale disqualifies it from the exchange. A 1031 exchange is a powerful tool for real estate investors looking to defer taxes, diversify their portfolios, and build wealth over time. However, it's essential to navigate the rules and requirements carefully and work with qualified professionals to ensure a successful exchange. By understanding the basics of a 1031 exchange and considering the benefits and potential pitfalls, which I cover in a separate video that I've linked in the show notes, investors can make informed decisions that align with their investment goals. If you're looking for additional information on 1031 exchanges or other investing opportunities, I've linked additional videos on 1031 exchanges in the show notes, and we have a wealth of information on Trillium Square's YouTube channel. Our goal at Trillium Square Advisors is to serve you by making your money work harder for you so that you can pursue your dreams.